And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my fellow futures trading family. It is time for the market forecast for Monday, June the 13th. I'm John Hoagland. Thanks for trusting me with your time this morning. I take a couple of days off, and this is what happens to the markets. I can't take any more time off, it sounds like. Welcome again. It's time to be focusing truly on context, definitely on risk management, and really remaining patient. It's going to be a very interesting and challenging week this week. We know that the markets are in trouble. We know that the economy's in trouble. It's going to be extremely difficult to remain patient. When the market is volatile, it tells me, through experience, for me, I have to really try and remain patient. There's no way I'm going to catch every move. There's a lot of risk involved in these markets this week, as in just about every week. You just have to wait for the market to tell you it's time to react. Very difficult to do that, of course. Just got word, Mom's watching, so everybody hide the beer. It's great to be back with you. It's going to be, again, a very interesting and challenging trading week for spectators as well as speculators. As far as economic releases this morning, there's absolutely nothing that I see on this calendar that is all that impactful, but we do have a lot of economic data due out this week, as I'm sure we're aware. To review, the FOMC meeting begins tomorrow. Tomorrow morning at 7:30 Central, the PPI final demand comes out. Wednesday, a whole lot of things stuffed into Wednesday. Retail sales, Empire State Manufacturing Index, import-export prices, business inventories, housing market index, EIA petroleum status report, and the FOMC announcement, as well as the Fed chair presser. Thursday, housing markets or housing starts and permits, jobless claims as usual on Thursday, Philly Fed on Thursday, EIA natural gas on Thursday, and we finish up the week on Friday with quadruple witching and industrial production, as well as the Michigan sentiment. Oh, no, they're actually leading indicators that we used to on the trading floor call misleading indicators. So there's a whole lot of information, a whole lot of information coming out this week, and we know that the markets are already struggling into this week already, as we do have U.S. stocks crumbling as inflation roars to 40-year highs. Inflation fears heighten. The FOMC meeting brings speculation of a possible larger rate hike than 50 basis points or a half a percentage point. Even cryptos are getting crushed. The Bitcoin is down 16% last I checked. Treasury yields have of course lurched higher. The 2-year rate is at rates we haven't seen since 2007. The 2-year rate, that is. Global recession fears are peaking as the UK GDP has fallen for the second month in a row. Crude prices have come off highs, still near $120 on economic demand slowdowns in demand. So there's a whole lot of things going on. As always, just be patient. Look for the right opportunity. There's a lot of opportunity for traders to really get hurt this week, and we don't want that to happen. Be patient. Lacey's here. Lacey missed you guys all. I know I missed you all. I'm just very happy to be back with you. My brother says, hide the wine. Well, if Mom's watching, you better hide the wine, that's for sure. So as always, try and hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast and the Market Recap. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. Today is Monday. It's group coaching day. Here is the link to register at 1 p.m. We're going to sit down for an hour and talk about trading, one of my favorite subjects with many of my favorite people. As far as the VIX this morning is up 17%, 32.65 last I checked. Dollar index also higher at 104.71, and the yield on the 10-year up to 3.23% this morning. And so, got to say good morning to everybody as usual. Shaw, good morning. Good to see you. First in the room. You win the prize this morning. Tachyon. Scott saw and he conquered. Chilling with Dylan. Yes, it looks like an interesting week. Brian Tachyon had a lot of fun learning how to use pitchforks Thursday. Up 250 Friday. 400 to the practice account using micros only. That's a nice day trading micros. Testing it for a couple more days before getting back into the trading combine. Good luck when you do that, Tachyon. We are looking for all of your success. Patrick J, good morning. Charles March, Michael Knight, going to be a rough week, it looks like. Yeah, another manic Monday, Rick. Good to see you. Love you. Force driven. Yes, it is time to roll to September. As of this morning, the volume is greater in the September contracts. In our equities, move to September for sure. Alfred, good morning. Denny Z, Glitter Sandwich, good morning, and everybody. Theo, good morning. Frederico, James Swan. Good morning to you. Good afternoon, I should say. Khalid, James Swan, when does the top step want us to roll forward? It is not a rule violation not to, James. What you want to do is you always want to be trading the contract month which has the highest volume. So when we know rollovers coming, and this was a weird rollover because usually it's the Thursday before the week of expiration, which expiration we know is on Friday. For some reason, they had it scheduled for tomorrow, which I thought was way too late. Looking at the volume this morning, going to be trading the September contract myself. Bill Phillips, good morning. Rollover is just to follow the volume. Exactly. Rob Crust, good morning. Terry King, Sarah Hall, good morning. Prayers and love to you as well. Chris Johnson, JNR, Isaac, Joe, Rob T, Jerry is awake. I hope I am too. Denise, good morning. I Print Money, love that name. Stephen C, good morning. Looking at open interest, it's hard to know if the expiration is the cause of the 244,000 drop in open interest. Usually it is going to be. Looking here, I don't see a 244,000 drop in open interest anywhere on the things that we're looking at. Well, the S&P's had 152,000 increase, and that is certainly a function of rollover. Nico, good morning. Devant, Trading Research. Always look at the sum of the two front contracts. That's definitely a function of rollover. 244. Yeah, you're looking at just the front month. That is definitely rollover, because if you look at the September, we added almost 400,000. So that's certainly a function of rollover, Stephen C. And when you're looking at open interest, I always get the total, the bottom, all of the contract months, the total open interest. For that reason, you're seeing an expiring month losing open interest there. All right. Okay, we have a too early for beer, but consider the Bailey's hidden. There you go. Meeting was good. Thank you very much. Thank you very much, Sarah. It was a good couple of days, and it was kind of good to get away from the markets and spend some time with my coworkers here, and I think we got a lot accomplished. Jack. Can we have Devant? Can we have a nanosecond of silence for all the crypto kids? Right, they're certainly hurting today. Jack, what was the bad news? Well, from what I understand, the CPI number on Friday just continued to to continue what happened on Thursday. Thursday was maybe somewhat technical. We'll see this on the charts. The news on Friday, I think, was the thing that really kind of continued this push to the downside that we're still seeing. Lots of fear. Oh, what the hell happened Thursday? Why did it tank the day before CPI news on Friday? Hair looks good. Well, thank you. My hair looks good. Yeah, I think Thursday's breakout of balance, and again, we'll see this on the charts, began this. I think it began as a technical adjustment, and then CPI just kind of exacerbated the issue. Good morning, Ron L. Zach. Dead letter opener. VIX is back to 42 incoming. Yeah, right? It may be. James. Jerry is awake. Good to see you. I hope I am too. Marcelo. Yes, definitely roll forward, James. Danielle, good morning. Taking it easy this week. See you guys at group coaching. Good. Pitchfork won't load on web-based charts. Interesting. Thanks for tipping us out on that, Jerry. Rusty Golfer, my spirit animal, how are you? Yes, see the total. Yes, Steven C. Yes, definitely. CPI got leaked. It's possible. Can't tell me that somebody didn't know something that told somebody else that told somebody else. Where are you getting your open interest data from? We get that from the CME Group Bulletin. Here it is. And if you have more questions about it, please join us for group coaching at 1 o'clock today. JPM said the CPI was going to be hot. Thank you, Anne-Marie. It's good to see you again. Jack, have a good week. They traded ahead of it, I'm sure. JPM knew. Jack, love y'all. Music wall pick. Hello. Well, the music wall picks. Oh, okay, good. And it leaked out. Of course it did. Right. It's good to see everybody. Good to see you, Anne-Marie. You're maybe back in town. And we're going to get into these charts now and take a look at what we're seeing. Excuse me. Our equities are in a kind of a big area of space here. It's very difficult to find areas that aren't like swing lows from the past here. We've got our weekly kickoff levels that are to the downside, largely measured moves. It's something that we see with the pitchforks that our friend Matt has been showing us. Measured moves show us potential targets and potential areas for execution. Definitely try it on the desktop platform, Jerry, and we're glad you're here, all of you. All right. Let's take a look here into the charts. Let's start with the E-mini and the S&Ps. And it's going to be a challenging week. So yesterday, I should say Friday, we added 152,000 overall in open interest. We lost 244 in the front month and added whatever it was on in the September month. Now that's roll day. That's switch day. It usually happens the Thursday before the week of expiration. And I believe it pretty much happened on Friday. We know we have higher volume in September today, so I'm trading September. Here was Thursday. We had all of this range-bound activity, and we talk about range-bound rules all the time. When the market's in range, we buy low and sell high. We look at the extremes of those ranges for support down here and resistance up here. When we do get a breakout outside of balance, especially a balance of this kind of magnitude, this was a long time we stayed in this area of balance. A lot of folks were feeling optimistic about the low being in. We talked about that early last week, and I said, well, I don't think that the low is in, and here we are. So we get the breakout on Wednesday. We bring in some volume. We get the continuation on Thursday. Thursday's the day of the breakout. I'm not sure what day it is. I'm still getting my feet on the ground here. Thursday, we get the breakout. Apparently, JP Morgan knew something and traded ahead of it and tipped everybody off. And now Friday, we get the big push to the downside. Now we're down here in space a little bit. Good morning, Ram. Good morning, Anissa. Good morning, Isaac. Joshua, good morning. So on Thursday, a knowledge of potential of the CPI broke us out, and if we follow the rules, maybe we tried a long down here, but as soon as we got down there and showed some volume and some participation or even some momentum down there, we knew we were wrong and we could go the other way. We did leave a late spike on Thursday. Late spikes, we open in or below the late spike, we go in the direction of the late spike. So a lot of the move on Friday was prior to the open, but if we followed our rules, then maybe we found a way into this. Okay, we have a degree of delta divergence here. Okay, we have price moving lower, we have delta moving higher. Delta moving higher indicates more aggressive buyers. They're using market orders to buy into this thing. I don't know who would be doing that. I know it wouldn't be me, but you can expect to know that there's longer time frame sellers in a market where there's a delta divergence. So what does that leave us with today? Well, we've got a weekend gap. We've got overnight inventory to the short side. The open interest, the big boost or the big drop, whichever you want to look at, is kind of moot because that's more a function of rollover. But if we're looking at the delta divergence from yesterday or Friday, we can say that maybe we did push some longer time frame traders into continuing to sell into this market. Where is our weekly kickoff? It is all the way down here at 3705 to 3700. That's a measured move. That goes from here to here, and then from here to here. Very similar to the way the pitchforks work. There is a couple of swing lows in that area on the way up, so we'll be watching this area for potential for profit taking or even potential moves to the other side. Now, we've come a long way in a short period of time. Thursday, Friday, Monday. Are we getting too short in specific time frames that may cause a response in the other direction? We're waiting for information this week. So my thought is, in the back of my mind is, are we going to just be looking for an area where two-sided trade can occur until we get information, the coveted FOMC release on 1 p.m. on Wednesday? It's entirely possible. But I'm still expecting volatility. I'm still expecting wide ranges. I'm expecting some lack of liquidity in this market because a lot of our more longer time frame speculators and funds and banks are going to be hedging for what may happen on Wednesday. So I'm going to try and stay calm. I know that the market's opening out of range, out of balance, out of everything, out of its mind. So I got to try and stay patient. I'm going to be, looking for opportunities as the day goes on, using daytime frame structures with which to limit risk. Most important thing this week for me is not to lose a whole bunch of money because the opportunity is going to be there. If I do things right and I stay patient and I find and I look for the right levels and the market speaks to me, I know I can have a really big week this week. And that's great. My goal is not to get my teeth kicked in this week. And that's my goal for everybody because it's possible. So be patient, think risk management, think capital preservation, be patient looking for your opportunities. Looking at the 30-minute chart again here, we've got a weekend gap. That gap leaves a naked point of control right in the middle of it. We've got weekly kickoff low all the way down here. Are we going to see regular time frame sellers, regular trading hour traders come in here and push this market lower for our short time frame shorts that are in this market from overnight? We know we're opening with a gap. There's gap rules. But if this overnight inventory starts to get nervous, they can bring us to a much better trade location to look for shorts. How about coming back to check this point of control or a gap close? Okay, that brings us to last week's low. This is kind of a target-rich environment. If the market gives us the opportunity here, I'll be peaked. I'll be looking to see, all right, are there some fish here? If I think there are, I got to figure out which side of the boat. The one thing that I just mentioned, I'm okay losing a couple of worms, but I do not want the market to take the whole rod and reel. Patience. So we've got a gap. It's a substantial gap. These ranges are big. The volatility is big. Everything in this market is big. This gray line here is a previous weekly kickoff level, 38.55. See how the market came down through it, came back to it, found it as resistant, and then continued to move to the downside? This might also be an interesting area. See, Lucas Teeter is saying, I wouldn't touch the market for the entire week. It's not worth the risk versus a small reward. Exactly. But if I do find that the market offers a small risk for a bigger reward, that's what I'm looking for. And my brother is like, yeah, watch out for bear market rallies. Opposite moves can be really vicious and fast. They can take your money faster than you can make it. So be cautious. Gap rules, measured move, expect volatility throughout anything that happens this week, whether we do fall into a range and wait for Wednesday or if we do continue a move in either direction. Here's the crude oil. Excuse me, my goodness, I apologize. We've got rollover week this week. Still looking at the July contract. By Thursday, we'll probably be trading the August contract, but we're still holding upside structure here. There's a relatively close level for a potential start market state change, and that's our weekly kickoff low here at 116.60. If we find support there, we may fall into balance here, especially during rollover. If we accept down below it, I think that brings us to a potential downside market state change. I don't know how that's going to be true. I think that the supply issue is so deep that it's going to be very difficult for this market to come off without any changes in policy. The way this market has been holding up, I mean, we lost 16,000 on Friday. That's some long liquidation. That does take some selling power out of the marketplace. I don't see that right now, above weekly kickoff low, any longer time frame traders are going to be making any longer term bets for lower prices in crude oil. Take a look at the 30 here. Okay, this is last week's profile. I was looking at overnight inventory to the short side. We opened here. We're now trading here, but we're still in range. This is a point of control that I can get rid of. We've been through this. I'll get that later. So I'm really focusing on value from Friday, value low from Friday as a potential area of resistance. I think the real area of resistance is last week's and the entire week's value area high, which puts us up here. We did not open with a gap. We opened in range and below value. So my question is, do we reaccept value from Friday or do we reject value from Friday? I think an acceptance of it brings us to last week's value high and a continuation below this value brings us down to weekly kickoff low. Relatively substantial move, but I think, overall we're still largely in balance here in crude oil. We are close in both sides to a change in potential market state. Back to the equities, Nasdaq now. We've got a very similar situation. We added 11,000 in open interest on Friday. We know that that's switch day. We're going to see all the volume in the September. So if you're trading Nasdaq, please move to September contract. It was a technical breakout on Thursday, supported by fundamentals. Downside structure in the longer time frame now remains. It's open to space down below. There are some swing lows. A measured move takes us down to our weekly kickoff low here, which is 10,887. The weekly kickoff low. See the market just kind of continuing in this downside structure. Here's the 30-minute. It's going to look very similar to the S&Ps. We had the late spike on Thursday, opening below the late spike, had the continuation to the downside. We have some continuation last night. We've got a lot of overnight shorts in this market. Those overnight shorts better be on alert. We've come a long way in a short period of time. As my brother said, watch out for bear market rallies. We got a whole bunch of weaker hands shorts here. If I'm a longer term trader and I'm looking for a good trade location to find an opportunity to work to get to the short side here, when I see this, I'm thinking, if I just do it here, I may really kind of shoot myself in the foot, because there may be some substantial shorter time frame shorts in here that could give me an opportunity to get a better trade location if I'm looking for shorts. So a lot of it depends on how important the longer time frame feels about continuing to push into this market. We had a delta divergence here on Friday as well, so we know that there's a hint of longer time frame traders selling into this area up here. Will they protect it if the short time frame brings price back up to it? So many questions, so little time. But again, in these markets, no matter what direction it goes, no matter what happens, today, tomorrow, I'm expecting, even if we fall into an area of balance, I'm expecting volatility within that balance. Gold. What did we do? We had signs of flight to quality on Friday. We added 15,000 in open interest, but we really didn't change balance at all. We attempted to. We traded right to the previous week's high. We traded down to the previous week's low. We didn't go anywhere. We didn't do anything. Excuse me. Excuse me. My goodness. So now we're right back to the middle of balance. This market has had an inability or a failure to expand balance or range. Friday's big open interest is encouraging for a change, but it didn't come. Back in short time frame control is my question. Where are we? Here's the big move on Friday. Look at the delta divergence. We had longer, stronger buyers placing bids, soaking up whatever the shorter time frame traders would sell them. And then we have our capitulation at the end of the day, when all of the short time frame shorts had to get out so that they could go home flat. Settlement was up here. Settlement's 1875. We've got overnight inventory to the short side, but bringing us right back inside value. Gonna try and stay patient today. We're still in balance. We're still in range. We're still stuck. If I were to take this profile and expand it all the way to the right, where's value? Value low for last week, here. Value high from last week, here. You can almost see it right here. In the middle here, I'm not doing anything. Don't want it. Not going to be looking to do anything until there's some sort of change here. Does that mean I miss the big change? Does that mean I miss the big move at the beginning? Maybe it does, but I got to protect myself. This tells me we got a lot of shorts in this market. If we can't continue down into the value low, then we might see these overnight inventory, these overnight shorts bail a little bit. A lot of it depends on what the equities do as well. Here's the euro. Dollar has been lurching to the upside, higher rates, more expensive dollar. Open interest rollover influenced. We lost 6,200 here on Friday. Okay, we've got the front month is September. We had balance up here. We broke out very similar to what we did in the equities on Thursday. Continuation, loss of open interest, rollover related, attempted continuation today. Here's what it looks like. Kind of similar to the equities, as we mentioned. We have the no real late spike here on Thursday. Friday, very small daytime frame range. Opening overnight inventory to the short side. Left a naked point of control around here somewhere. I'm going to take this off. Are we too short? That's the real question. Are we too short in short time frame? Is the longer time frame going to let us bail on these shorts before they come in and start whacking it again? Wish I knew the answers. I would be so happy to say, here's exactly what's going to happen. Here's what you do. Nobody can do that. Nobody can do that. Here's the 10-year. There's no safe haven here in the treasuries if you're looking for a place to go if the stocks continue to move lower, because we all know rates are going to move higher. Friday, we added 32,000 in open interest. Rates continue to rip higher. Downside targets, I'm really reaching to find anything that makes sense to me to the downside here. It just looks like an open book to the downside. I do have 112 as there's a couple of things back in the way back of history that seem to kind of line up for me, but I'm not real confident in it, and it's a long ways away. There's a long way to go for these 10 years for our treasuries. Rates are going to go higher. These existing treasuries are going to get cheaper and cheaper. That's what people are saying. There may be a 75 basis point, even 100 basis point rate hike on Wednesday. Nobody's done that since Paul Volcker, and he sent us right into a recession when he did that. So what are we looking at as far as shorter time frame? Additional open interest, gap to the downside, overnight inventory short. If the shorter time frame doesn't find what they're looking for, they can give you better trade location to look for opportunities to short this market up near last week's low, value low from yesterday or from Friday. Point of control from Friday. Settlement from Friday. This is a very tightly packed area. It looks like there's probably some fish under there. And I like it because I can limit risk. Not quite sure what to do down here. In the natural gas, it's supposed to be a very, very hot week here in the U.S. Probably not going to be using much natural gas. Price has held balance. We're 1 week to roll over. Extreme heat expected in the U.S. Demand is going to drop for that period of time. What doesn't fall is the demand in Europe. 9,700 loss in open interest. That can be rollover related. Here's the 30. Overnight inventory was short. I don't think it's short anymore. We were kind of looking at the market down here. The market opened here. We're right back there. We're very small range on Friday. Looks like we've opened and tested into value, maybe a little bit of rejection of value. I'm going to be looking at like overnight high and overnight low for initial opportunities, only because I can limit risk there. If I were going to be trading this market, I know that I would be telling myself, I need to be really patient. But I say that about every market and about everything. Patience pays in volatile markets. I've had enough experience in volatile markets where I got so excited and so lost in the moment that I just completely overtraded and just cut myself to ribbons. I don't do that anymore. I'm going to stay patient. I'm going to recognize that these markets are crazy. They're volatile. I'm going to miss things. and I'm going to be okay with it because it's the really good ones that I really want. Anne Marie is asking about backwardization, and I'm pretty sure you're talking about in crude oil, correct? So what Anne Marie is talking about here is this is the bulletin for crude oil. So when we look at the front month, it's $120. Next month, $118, $115. As we go further into the future, December 31, we're looking at crude oil at $66. So the market's been moving up rather steadily, and the front month is usually going to lead that direction. I'm hoping, Anne Marie, and I don't know all that much about contango and backwardization, but I'm hoping that the speculation and the backwardization of this is speculation that prices are going to come down. If this was the other way, I would think, there's the cost of carry. So I don't know, it's a really good question. And Anne Marie, when we get to group coaching, if you're going to be there today, I would love to hear your thoughts about the backwardization and see what it means to you. Janik, naked point of control, purple line and weekly kickoff level, black line. Point of control is not the purple line here. The purple line is last week's low. The point of control is this green line, which is it's considered the highest, the fairest price for the session because it's the most visited and has the highest volume. The weekly kickoff levels are levels where I expect the longer time frame to be required or need to adjust inventories. So those I kind of come up with through technical analysis, some candlestick patterns, market profile information, a little math, a little tea leaves, and a little chicken bones. The longer you stick around, you'll see that sometimes those weekly kickoff levels to become very, very helpful in your trading. So, okay, we're just getting into this week. It's always a challenge for me on Mondays. I know I'm going to try and really stay patient today. Looking forward to seeing everybody for group coaching today at 1 o'clock. Anne Marie, would love to see you there and love to hear your thoughts on the backwardization and contango. And Eric Hoagland, good to see you. And okay, let's take our deep breath. Stay calm, cool, collected, graceful, creative, and humble in your trading today. I know I've got to just really try and stay patient, wait for the market to tell me. Frederico, how many Hoaglands? We have a few Hoaglands here, don't we? Right. Excellent, Anne Marie. I appreciate that, and we'll see you there. See all of you there. Get out there and profit today. Trade well. I'll see you in the proverbial pit here in about 4 minutes. And have a great trading day. And I'll look forward to seeing everybody, Anne Marie, at group coaching today. Should be a really good one. I'm excited about it. Have a good day.